Hello and welcome back to Bunnex Investment Group. In this video, we are going to talk about order blocks. So we'll be making some changes to our content on this channel. Institutional market maker content will now be available on our Telegram channel. This follows after several claims and strikes that we have been given by the owners of the copyrights of that particular content. So if you would like to watch and binge on this kind of content, you will need to join our Telegram channel where we will be uploading those videos. So in the next coming days, we will be uploading a video series on smart money concepts, particularly the order flow and order blocks. So before we jump into this whole video, be sure to check out our free Telegram channel using the link in the description box below. And on that note, please do not fall for scammers who are coming in the comment section with several Telegram links or even website links. They are all scammers, and forewarned is forearmed. So in this video, we are going to talk about order blocks. Basically, what are order blocks? So by the end of this video, you have an appreciation of what order blocks are in Forex market. So do not try to actually trade out of all the concepts that we are going to be derived from this video, but rather have the definition which you are going to use in the next coming videos. So we are going to talk about what order blocks are, then where do order blocks occur within the Forex market, then order blocks illustration, and last but not least, the order block chart example. So we'll actually talk about these order blocks in real markets. So if you want to understand the whole concept as well as comprehend how these actually occur, please watch till the end. And last but not least, we'll actually conclude and give you an insight of how we are going to go about this whole order blocks concept. So on that, we have a November Black Friday discount, and for those who would love to get our services, we have a discount running through November, and for $85 you get a full recorded masterclass that was actually taken from our October masterclass. On top of that, you get a peak identification template which helps you in identifying high potential points of reversal, and you have 1 year access to our Telegram VIP signals channel where we share entries, stop losses, and targets, as well as setups for the trades that we will be taking. So to get this, please use the Telegram link in the description box only. Do not fall for scammers who are coming in the comment section. So as I've illustrated, or as I've shown you on the small outline for this video, we are going to start on what is an order block in Forex trading. You definitely need to know what this is for you to apply in how to trade or how to use them in a strategy. So the first thing is order blocks can be simply defined as simple supply and demand zones that are of high probability. So what we are basically saying here is we have supply zones, we have demand zones, but in this case we are saying these supply and demand zones are now of high probability to an extent of actually approaching 90% accuracy within the system. So in simpler terms, all order blocks are special kinds of supply and demand zones formed when there is a block order. So what we are referring to a block order is actually a very big number of orders or contracts or trades in layman's terms at a specified point. So let's say at $89 on Euro GBP, Euro US, at $89, there has been entries or trades that are summing up probably to 500k lots in lot size. So at this point, there are a lot of orders, and that point will definitely have an effect within the market. So this particular price is actually giving us a range of, or a region where we have a block. So there are significant points in the market where big institutions in trading open contracts. So these big institutions includes banks, brokers, hedge funds, and etc. So entry of big institutions on these points has two effects in the markets, and the first one is price escapes the order block with high momentum breakout, or it results in a reversal trend. So if someone knows how to trade these order blocks, or knows to place his or her entries on these order blocks, will have a higher probability of actually winning on that particular trade. So the next thing is, where do order blocks occur? So order blocks occurs at rally top or rally bottom. By rally top, we basically mean after the market pushes up, right? Usually these large institutions, the smart money, will need to book their profits for the next rally. So in this particular case, we'll have an order block at this point, right, which is now to disturb the supply and demand of that particular pairing of currencies. So we'll have price to go down. Then in this case, at rally drop, we'll have a rally, and at the reversal point, we'll have an order block. So after the smart money push the market, they usually pause, right, to accumulate, that is, to get in more contracts from retail traders, then manipulate, and after that they then place a block of orders, which is the same as trades. So they now enter with everything that they have, not everything as such, but just to show that they get in with a lot of contracts at once. So when drawing a bearish order block, right, a bearish order block, which is actually occurring at the high, at the rally top, mark the high of the last bullish candlestick. Basically, you have bullish candlesticks going up, therefore we are saying mark the high of the last bullish candlestick and its low, and then draw a rectangle around it. So extend the rectangle to the right in an empty area of the chart where price will react in the future. So in this case, let's say we have a candlestick at this point. We mark the high and the low of the last bullish candlestick and drag this rectangle into the future where we expect to see price to react or act next. So after actually at this point, we need to consider that an order block candlestick is basically a candlestick which is in layman's terms healthy. We do not consider candlesticks with wicks, large wicks than the body. We need bodies to be larger than wicks. So the converse is true for a bullish order block. When we are saying a bullish order block, it's a point that we are expecting a move to the bullish side. So in this case, we are saying after a rally drop, right, a rally drop, we find the last candlestick, the last bearish candlestick. In normal context, it will be the last red candlestick. We mark the high and the low of that particular candlestick and drag the rectangle into the future where we expect the market to react to. So after a few attempts, you'll be able to draw accurate order blocks. So it will just take some patience and practice. So before you run around and get confused, this video is solely to define what order blocks are in the forex market, not how to trade using order blocks. That particular video is going to be coming next, and stay tuned. And if you haven't subscribed to this channel, do so right away. So here's an order block illustration. We had a rally going down, which is actually signified by this arrow. We are going down this with price. Then at the rally bottom, right, we said at the rally bottom, that is where we expect to see an order block. In this case, this is the rally bottom, and within this floor, the last candlestick from the rally is the order block, which is this one. It is the high and its low, or part of its body, and from there, that is where we draw with our rectangle into the future. And in this future, we now expect to see price reacting in this part. So the reaction part is not going to be covered in this particular video, but in the upcoming series of videos, you will definitely be able to trade as well as know what to do when price comes back into the order block. So here is euro against dollar. This was a rally going down, and within that rally, the next thing is we saw a pause accumulation, right? Pause accumulation, manipulate, and continue. In this case, we were going down, and as we were going down, we can see that we had a fast moving or aggressive candlestick going down. After that fast moving, we saw the last red candlestick here, which was followed by a green candlestick. It was basically a pause, which is then manipulate to actually induce traders to go up and then go down. So reaction of price when it came back to this point was actually in our favor. Let's see how it reacted. As you can see, we can see that from the pause, we had price come back to the particular order block. So this is not the scope of this video. This is just to illustrate what order blocks are. In the next video, we are definitely going to talk on how you can trade, structure a strategy on how you can trade using these order blocks. So right now, let's go over the charts and have an example of how it goes. Right, so this is euro against dollar, and as we have said, order blocks occurs at the rally tops and rally bottoms. So in this particular video, as I have emphasized, that we are not going to talk up on how to trade using order blocks, but we are going to just show what order blocks are. So in this case, we can see that euro USD is going down, right? So in our next video, we are definitely going to talk about the market structure and how order blocks comes within that market structure. In this case, we can see that the market is going down, and as it will be going down, we know that from market context, a downward trend consists of lower lows and lower highs. So in this case, it will be wiser for one to be looking for sales. But in this case, for illustration's sake, we are saying order blocks occurs at, right, rally tops. As you can see, we had a drop and had a rally top. Why did not I mark this point? Because there is no a healthy candlestick, which I have said order blocks needs to have a healthy body which is larger than its wicks. So we had this top, which was later retested, but in this case we are just illustrating. Then as we go, the last candlestick after a rally, in this case this was the last red candlestick after a rally, right? We've dragged into the future. So here it was the last green or last bullish candlestick after this small rally. Then going down, last candlestick at the bottom of a rally, right? Going up, can we see a healthy last candlestick in this point? No. Then here we had a flow of the market. After flow of the market, what was the last candlestick? We can see that the healthy candlestick was this one, right? So this is what we call an order block. It's basically a last candlestick after a rally or after an aggressive impulsive move up or down. So in our next videos, we are now going to define a strategy around this particular way of trading. So for now, you have to just know that an order block is a candlestick that signifies entrance or trigger of a large number of orders within the market, and it occurs at rally top or rally bottom. See you in the next video. Have a good day.